Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking back in on natural gas inventory report tomorrow, but a nice recovery by the bulls. We did defend this 327 support. We bounced off of that level on some consolidation, and let's see where this level is coming from. It's coming from way back here on January 19th, so we held it two times. It became resistance. We got it back as support, held, bull break, hold again, just barely holding again, and then the bull showed back up. So yesterday's video, I said we need to see a break of 335. That's a nice bull break here, and we're up here at the highs heading into the close for now until tonight. So the bulls have some momentum, and we're now looking at resistance. I'm looking up at the next price level, up at 3404. And heading into the inventory report, if we break 3404, the bulls are going to be looking good. On the daily time frame, it looks like we're reaching an equilibrium. And what that is when we have a dump or a breakout. So here's our dump, high of the bounce, higher low. I do expect to form a lower high unless the inventory report hits it out of the ballpark with a home run. But I would expect a lower high to form compared to 3153 and for this range to continue to tighten. So there's our higher low. I would expect a lower high and then a real tight range on declining volume. You can see that volume is already beginning to decline consistently over the past 2 weeks. We are on the verge of a bullish MACD cross, but the range that I'm currently watching on the longer term, I'd say a midterm time frame, is 3145 support and 3153 resistance. And if we top out before breaking that level, we'll have a new resistance level to watch, and we'll see if the bulls can form a higher low compared to 3145. So the weekly time frame with 2 trading days left to go, bullish reversal candlestick, it looks strong, but again, we need to confirm a bullish reversal candlestick in order to have confidence for the bulls for continuation into the following week. So if we close here or better, end of the day Friday, we're going to be looking for confirmation the following week, and you can see the weekly volume drying up there as well as the range begins to constrict. Let's see it on the 4-hour time frame. If we can see that tightening range, not really as clear. I like it on the daily time frame. And again, this equilibrium pattern, you will find it absolutely everywhere on every time frame. After you find a breakout or a breakdown, higher lows, lower highs. Let's see randomly if I can just pull up a chart to find an example. Let's see if Facebook has any clear levels. And it does. So here we go. Just a little example of this equilibrium pattern that's found everywhere. So Facebook daily time frame, here's your breakdown. Here's our low where we found support. High of the bounce, higher low, lower high, higher low. Then we got the higher high and a bull break of that pattern, and you can see the follow through from it. So we saw the range tighten, the volume, look at the volume drop off, continually decreasing. And as soon as we broke 122.50, that was the bulls proving to me that they broke this lower high pattern. And you can see it's been nothing but upside, strong move since. So higher lows and lower highs reaching an equilibrium after a breakout or a breakdown. Very common pattern, and I believe that natural gas is forming that currently on the daily time frame following the breakdown we had a couple weeks ago. So we'll check back in tomorrow after the inventory report. Bulls hoping for a break of 3404, I should say. And then we're looking up at 3513. Thanks for watching. See you tomorrow.